Hello and good morning, everybody. You're with Martin Penev, Chief Account Executive Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. As usual, starting with a short coverage of the main indexes, US markets. Over the weekend, the US Senate on Saturday passed a 1.1 trillion spending bill that lifts the threat of government shutdown. It was a bit criticized for being too kind to big banks. But then again, the Dow went 25 points down, the Nasdaq 32, the DXY index is in decline as well. USD CAD 50 pips up, USD Swiss franc 60 pips down, USD JPY almost 90 pips down. Industrial production month on month, capacity utilization, housing market indexes, net long-term tick flows, and also New York Empire State Manufacturing Index, 3 and 6 month bill auctions and total net tick flows today. CPI on Wednesday, monetary policy statement again on Wednesday, interest rate decision, and then again the CPI for Canada on Friday are the Tier 1 events for the week. Euro markets, the CAC 40 and the German DAX 30 added losses to complete the last week's trading on a quite negative note, along with the rest of the markets we follow. The DAX declined with over 200 points on Friday, ended the week with negative 500 pips, and the French CAC 40 lost over 110 pips, a total of 303 pips for the week. UK markets, the FTSE 100 lost 200 points on Friday to 6,223. Over the last week, it lost 500 points. The gilt yields are falling as well. The falling oil prices and the political turmoil in Greece has driven investors to look for safe haven assets such as UK gilts, which have returned about 13% for the year. Construction and manufacturing both fell last week, adding concerns that data from the week will show a decline in inflation. The pound had its first week of advance against the dollar for the first time in 7 weeks. And it was also the biggest increase since June 13th. Sterling is still the second best performing currency after the dollar. The cable, 11 pips down on Friday. The pound versus the yen, 63 pips down on Friday, versus the Aussie, 132 pips up on Friday, and then versus the loonie, the Canadian dollar, 74 pips up on Friday. This week will be quite rich on calendar events for the sterling, so cautiousness is advised among the traders. Moving along to Asian markets, the Japanese Nikkei 272 pips down last Friday, Hang Seng 220 pips down, and the Australian S&P 233 pips down. Shinzo Abe claims mandate to stoke economy after sweeping election win. Asia stocks slump as oil rout spurs growth concern. Tomorrow we have the RBA's meeting minutes and Assistant Governor speech. Merchandise trade balance for the Japanese, merchandise trade balance again. And on Wednesday, we have some China data, GDP for the New Zealand. And on Friday, we are looking forward to see the Bank of Japan press conference. On the commodities side, the gold fell for a second day before the Federal Reserve meets to assess the pledge to keep borrowing costs low for a considerable time and provide guidance on the outlook for monetary policy. Silver, platinum, palladium declined as well. The silver for immediate delivery declined 0.4% after gaining for 2 weeks. The Fed meets tomorrow and the day after to debate the pace of rising borrowing costs after holding rates near zero since 2008 to boost growth. We believe that policymakers are unlikely to rise interest rates this next year as they struggle to spur inflation amid sluggish global economic growth. Gold remains 1.5% higher this year after slumping 28% in 2013. Oil traded near a 5-year low as the United Arab Emirates said the Organization of Petroleum Exporting Countries, OPEC, will refrain from cutting output even if prices slumped to $40 a barrel. They also said that there will not be another rash meeting in the next 3 months. That was all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.